Is there more pain ahead? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Jared Dillian, editor of the Daily Dirtnap and founder of Jared Dillian Money. I could barely get it out, Jared, because it's Friday. Gosh, I think we're all tired. So glad to have you wrapping the week with us, but what a week it's been.
Yeah, this has been like an entire year. I think I actually have even more gray hair now. So,
Wait, me
you
too,
know.
but I'm not telling anybody. I mean, it has been and we were joking like you can't even turn away from your screen right into the close because there's so much going on. So, just give me your how you feeling heading into the weekend.
I'm feeling a lot of different things. I'm actually kind of focused on the bond market right now. The bond market's a total disaster. There's two theories about the bond market. One is that China is retaliating and selling, some of their
Mm.
800 billion worth of bonds. And the other is that the basis trade is blowing up. I like the China theory better. I mean, the timing it's too much to be a coincidence, that the bond market falls apart right after Trump puts all these tariffs on China.
Yeah.
So I like the China theory better. Um, I would rather go out long bonds into the weekend. If you think about the potential for some kind of deal or something with China over the weekend, I mean, if that happens, bonds are going to rip. I think the curve is going to continue to flatten. It steepened a lot earlier this week. But the Fed has kind of indicated that they're not going to get off. They're probably going to cut in May. But I don't. They're not going to. There's not going to be a bunch of rate cuts forthcoming. So I think the curve is going to flatten. But that's kind of what I'm looking at right now.
Mm. Yeah, the bond market, I think, has been on everyone's minds, and it's interesting because as we go in, so if you're in drive time or listening to this, getting a breath of fresh air because gosh, we need it. We had a ton of news again today as we continue to keep our eyes on Washington. Consumer confidence fell sharply, but we saw stocks rallying. I think also along the lines of what you're talking about, people I think are nervous about one announcement switching everything and they don't want to be on the wrong side of that. But we did have at the end of it, NASDAQ up 2%, S&P and Dow also with gains of over 1%, S&P over 1.5%. But you had these big moves in treasuries. So stocks are rallying. And if you look at that in the headline, you'll be like, oh, okay, that's sort of good, right? Maybe people are feeling, but bonds, as you said, look terrible. We have mortgage rates over 7%. We have gold rallying again. So it seems like people don't want to be too overexposed to a move over the weekend, but it's not like there's any sign of this settling down, or is there?
Well, I mean, first of all, I forgot to mention one thing about the bonds. We've gotten some of the most bond bullish economic data this week with CPI. PPI was like a horror show. It's incredibly deflationary and consumer Michigan sentiment. And yet still bonds sold off like, 5 or 6%. So, um, yeah, there's the other thing I'm really focused on is volatility, is the VIX.
Mm.
The VIX got up to about 60 earlier this week,
Yeah.
which is, I mean, just for perspective, during COVID, it got up to like 80 or 90. Throughout, even in the dot-com bust, really the highest it got was about 40. So 60 is an extraordinary level. And generally, when it gets up to that level, you want to be selling options, not buying options. So I've been selling puts in the S&P. And it's just been, the VIX has gone from 60 to about 38. Vol is getting murdered. I don't know. I don't know what's in store for next week, but if vol continues to come down, that's going to be good for me. So
Yeah. I uh I was speaking to someone earlier in the week who said if you have a recession with yields not cooperating, we're not in America anymore. We're in Brazil, we're in Turkey. And this idea that the US is behaving a little bit more like an emerging market, I think is a lot of places. And I think that I saw a line from Brent Donnelly as well, just as we were going on air, saying that for a developed country, stocks, bonds, and currencies rarely all fall at once. For that to happen in a capital market system like the US is sort of mind-blowing stuff. So, along with your reference to the VIX, just to give, people level set on how extraordinary some of the moves we saw this week were. I just want to say you mentioned something about options, and this is where I think it gets tricky because I feel a lot of people feel like a little bit paralyzed, a little bit unsure what to do. You're utilizing that, and you recommended people be careful though, and don't do something. Don't be tempted to do something in options. What were you concerned about?
Well, I mean, generally, when first of all, when the market was down earlier this week, people are sort of tempted to buy calls, right? And that works. Like, if you buy calls and the market goes up 8%, like you will make money, but it's a vol crushing event. And like generally, it makes more sense to sell options when they're expensive rather than to buy options. So I did not want to be buying any 60 vol call options, so
Mm.
it's just, I started my career in derivatives. I started on the floor of the P Coast. I worked on the derivatives desk at Lehman. I kind of think like a vol trader sometimes. And look, I mean, you can buy expensive options and it can work. But if, just for example, like in GameStop, like people were buying 500 vol options and like that absolutely did not work. So,
Yeah,
by the
this is
way, I saw a tweet today that as of now, realized volatility of the S&P is higher than Bitcoin. The S&P is now more volatile than Bitcoin. So
it's crazy. It's just crazy. I think that's really important point to make, and this is where like, experience really matters. And I've been saying this ad nauseum all week, and I apologize to those of you who've heard me say it over and over again. But it's really true. I mean, there are a lot. Anybody has a microphone these days. You really want to pay attention to people who've lived through stuff, who've traded stuff, who have experience and spent time in their career doing this kind of stuff. Because I think, especially with these sort of really quick moving markets, it matters. Did I hear that you have an options class, Jared? What's
yeah,
happening?
this has been out for about a week. I have an options masterclass, and a lot of work went into this. I spent a couple of months writing it up, and we've had a whole team of people putting in graphics and design and stuff like that. Um,
Awesome.
Basically, what I saw was a need for something like this. There are some options books out there. You can get options for dummies, which will give you like the hockey stick diagrams and the really basic stuff. There's the mathematical books, like the whole book, which is pure math, and most people don't understand it. And there's also some books in between, like the Nadenberg book, which is good, but is really meant for market makers, not for people who are just trading options
Mm,
directionally. So what I wanted to do was to create a class for those people who might know just enough to be dangerous. They know that, you buy a call and it goes up, you buy a put, it goes down. Like they know the basics, but they don't know much more than that. And it does go into some degree of mathematical detail so you understand the risks. So yeah, this was launched about a week ago. And
awesome. I had no idea, but I think it's really timely because it's hot. Like this is the part where people start to lose me as well. And you're right. There's like not a middle ground, and I feel like right now a lot of people are like these are some of the tools that are helping folks like you and the week up on in these markets. And I worry about people either sort of trying to go it alone or losing money in these really volatile markets. So that's awesome news. We'll post a link. We'll grab one and be able to post it in the description. So hey everybody, we got some comments, a lot of people busy trading, and some questions coming in. I want to get to them as many as I can because this is what we're here for. And hi, Christopher. I'm glad to see you're back and feeling better. So, a cash asking, does Jared think this is a dollar index bear market, and how low does the dollar go? In addition to watching bonds, Jared, a lot of people watching currencies.
yeah, I mean, in the last couple of days, we've had a 5 standard deviation move in the dollar. It's been just a collapse. You might remember, I mean, when I was on with you like 3 months ago, I said I was bearish on the dollar, when the dollar was on the highs, and it is perfectly played out. Now, of course, everybody is bearish on the dollar, right? Like now it's become very consensus. At this point, I think the dollar is going to go down maybe 1% or two, and then you have to start thinking about playing for a bounce.
Hmm.
I'm kind of more bullish at these levels, which is kind of what you want to do. You want to be bearish on the highs and bullish on the lows. So I'm not really looking for places to sell. I'm looking for places to buy, and I think it's probably gonna be in about a week or two that you could do that. So
So that kind of begs the question, does it feel like, so in the dollar, you feel like this move is feeling a little bit extended or overstretched? Is
oh, I
that
mean, it's completely oversold for sure. I mean, and this is just trader talk. Like this is just, technical analysis and playing for a bounce and stuff like that. I mean, long term, like when I say long term, I mean like 2 or 3 years. I think the dollar is doomed. I think it's got a lot more downside, but you could get a 4 or 5% bounce in the meantime, which is going to catch a lot of people by surprise. So, like I said, I don't think that's going to happen immediately, but I think in the next 2 weeks, we're probably going to get set up for a bounce. So,
so longer term it's doom, but there's a tradable bounce?
yeah.
I think that's really important because a lot of people, there's a lot of there are kind of two conversations going on right now. There's the shorter term trading conversation, and then there's this sort of larger macro conversation about what people see as a really shifting paradigm, and maybe the end of dollar dominance. And I think people aren't sure. They're kind of jumping right to the long term view, and they're not sure. And then there's a question of whether things can change enough to kind of revert that long-term view. So there's a lot in the mix of where people are trying to operate. How are you keeping it clear in your mind?
It's really a matter of time horizons. You kind of have like micro term and short term and medium term and long term, and you kind of have to keep all this stuff straight in your head. Um, I mean, I think it's telling that we got a question, asking about selling the dollar today. Like that's a piece of information. Like this is that it has become a consensus trade. My
Mm,
position 3 months ago, back in January, everybody thought that the tariffs were bullish dollar. I actually thought they were bearish dollar. I thought that Trump and Scott Bessent would tolerate a much weaker dollar because if you're putting tariffs on imports, then really like you want a weaker dollar to offset that.
mm.
So you haven't the dollar is depreciated about 10% or so, and you haven't heard anything out of the administration about it. I think they actually kind of expected it, and I think they welcome it.
Mm. Do we had said they want interest rates low? That's not working right for them right now. Oil lower, that's happening. Dollar lower, that's happening. Does the pace of the change matter as much as the direction? Because if things are happening in an orderly fashion, that's one thing. But when things happen so violently, there's always seems to be the worry that something's going to break or someone's going to blow up. What does it feel like this week? Does it feel disorderly to you, or is this tough but happening in a way where the market's handling it?
Um,
Or is that an open question?
it's actually been reasonably orderly, which is pretty interesting. Like even on Monday and Tuesday when we were down 5 and 6%, we were down 11% in 2 days. It never felt like the market was about to break, as opposed to August 5th of last year when we had the yen carry blow up. Like that to me felt like the market was breaking. Like that
Mm.
morning, like stuff with that. I was, honestly, last August 5th, I was freaking out. Like I was actually scared. This week, it's been, so you've had some big moves, but it hasn't felt disorderly. And, I've actually stayed pretty calm throughout it. So,
So the dollar looks like it's extended. What about stocks? I mean, you said you would rather be long going in. No, you'd rather be long bonds going into the weekend.
yeah.
Clearly, some people thought buying stocks was the right move. Is everyone anticipating that Trump's going to kind of pull a rabbit out of his hat and say, "Oh, we made all these deals"? Is that already in the price of things? Will that set off this big reversal of the action we've seen this week?
I don't. So there's a bunch of things going on. I was watching the market up until about 3:57, and I didn't see like, a like furious short covering going into the close. So I don't think that anybody is expecting anything going into the weekend. I mean, when I look at the chart, like we put in the bottom on Wednesday morning. I just I like I'm listening to my gut. Like I'm kind of, I look at the chart and it looks like we should have some more downside. Like we should retest, or like maybe not get all the way back down to the lows, but we still need. I think we need some kind of a retest before we go higher. So I'm kind of anticipating that next week. So
Mm. Okay, so definitely more volatility, maybe stocks probing their lows. Does it feel like that low will hold? Someone this week, and I talked to so many people, as those of you who are following along on Substack know, it felt appropriate to be talking to as many people as possible. Someone said to me, it feels like it was so violent, but it feels like it made, I think it might have been Tony actually, who said it feels like a pretty significant low there for the S&P though. One that might be tested, but pretty significant.
yeah, I believe that. I think the lows are in. And also, one thing I've been writing in my newsletter is that I think, everybody likes to look at analogs. They say, well, this is like 2008, or this is like, 2018 or whatever. I actually think a pretty good analog for the price action this week is 9/11 2001. 9/11 happened. The markets were closed for a week. Then they reopened, and I don't remember the exact number, but they were down about 13% in a week. Pretty similar to what's happening now. You had you had an exogenous shock. In one
Mm,
case, it was terrorism. In this case, it's tariffs. And it was a shock because, when Trump made his presentation in the Rose Garden, nobody anticipated that he would have come out with these levels of tariffs. So it was a shock. The market was down 11%. And, if what happened after that first week in 2001 is that the market rallied almost back up to the highs, and then stayed there for about 6 months and consolidated. And then in 2002, you had a vicious bear market that took us down like 40%.
mm.
So every situation is different. That's kind of the model I'm using for this. I do think in the next couple of weeks we are going to get a big rally that will take us back up to like 5,600, 5,700, close to the highs, maybe not exactly the highs. It's going to be a vol murdering event. I think the VIX gets back down to about 25 or 20, and that's what I'm expecting. So,
That's so interesting. The only difference in my mind, because I was in New York at 9/11, the only difference feels like, and this is not related to price action. This is just an observation that although there was this huge dislocation with U.S. markets and so many questions about it changed so much. Um, but there was a lot of goodwill toward the U.S. And some sympathy and a lot of conversations globally with allies. A lot of countries were also affected by it, even though it happened here in the U.S. This feels like not like that at all.
oh no,
They're
totally
yeah,
no.
like so.
I'm just
I
talking.
don't. It's hard to quantify that, right? Like it's hard to know. It's hard to know what the market impact is of blowing up relationships in the way we have, or whether it's just negotiating and everybody will feel that way. Like maybe that's the plan, but does it feel that way on the other side? And what does that mean? These are huge questions, right? That I don't think anybody has the answers to.
No, no.
Yeah. Someone's asking, how are you thinking about liquidity? How are you feeling about liquidity?
It's funny. I was in my office late last night. Um, I forgot why I was in my office. I was getting ready for something, and I was in my office, and I was watching bond futures, and I would say liquidity. I mean, liquidity in stocks is down. Liquidity in bonds is down like 90%. There is no liquidity at all. And I was watching somebody try to buy maybe like 50 million in bonds, and they must have pushed it up like half a point, just
Mm.
like, just working up the bid, working up the bid, working up the bid. And I'm like, you can't even move like 20 or 30 million in bonds, and there's just like no liquidity at all. Like it's really, really bad. So,
So
lucky for
what
me.
does that signal to you? What does that mean?
Well, liquidity is partly a function of volatility. So volatility is high, so there's less liquidity. People, when volatility is high, you have to trade smaller. You have to risk
Mm.
adjust your trades. So if you traded 10 units of something before, you can trade 2 units of something now. Like you have to reduce your size. So
Yeah, that's really interesting, and I think that is gonna, also continue to worry people, but it also is impacting the action we see, which you see these huge moves, but if it's on no liquidity, then, somebody said, speaking of Paul said, "Speaking of liquidity, I need a beer." I feel like I feel like that might be a sentiment that's shared by many. They may be choosing another form of liquid, but that it's something felt by many. Talk to me a little bit about gold. What's the move in gold been telling you this week?
I actually have a theory on this, and I think China is selling bonds and using the dollars to buy gold. If you look at the charts, they're completely negatively correlated. Um, that's what I think is going on. I mean, there's some macro reasons why you want to buy gold. Like first of all, the tariffs are super bullish gold. You have financial instability, which is super bullish gold. There's a lot of reasons to buy gold. But to be up $100 3 days in a row is,
Mhm.
I've never seen that before in gold. And the gold miners, GDX is close to 50 now. Like GDX hasn't been at 50. I should look at the chart. It's got to be since like 2015 or something like that, or 2013. Like the miners are actually starting to catch up to gold. It's really the first time we've seen this.
Mm. Yeah, if folks, there have been a couple people on that thought that would happen if you've been taking notes. Does it feel like that might be overstretched as well, though, Jared? And I think the question people have with gold is, if I want to increase my diversification, I haven't done so yet. Is it too late? Do I chase it from here, or do I try to wait for a pullback? I mean, because maybe people will sell their winners, and if things really hit the fan, that might go down, like, which we sort of saw a little bit the other day.
So I actually talked to a precious metals dealer today, and I asked him how business was, and he says it's quiet. He's like, you would think people would be buying gold. They're not. They're waiting for a pullback.
Mm,
They're like scared of new highs. So this tells me this is not late stage bull market at all. This is not even mid stage. This is still early stage. This is still early stage. So the answer is yes, go ahead and chase it.
mm.
Also something like gold that's breaking out to new all-time highs. Like there have been statistical back tests of charts, and like basically like these studies have shown that if you buy the upper right hand corner of the chart, that actually works out most of the time. It's classic trend following, right? So if something's going up, it's going to continue to go up. So
Yeah, I think you've schooled us all on this, like, extend your window, right? Like,
yeah.
don't leave it locked in there. If it's moving up, just pull it out a little bit and you can see a different picture, which I like. That visual helps me a lot when I think about that conversation. Someone's asking, Jane J asking, does Jared have an opinion on copper?
I do have an opinion on copper. It's had a nice little bounce. I think there's resistance around 473, 474 in copper. Um, so I think it's got probably 20 more bucks of upside. At which point I would take profits. So
Mm. And MK asking 10-year treasury, which comes first, 4.75 or 4.25 on the yield?
425 for sure. There's big support in tens, which is resistance and yields at 457, and we bounced off of 457 today. Last I checked, tens were trading around 445 or something like that. But like, there's big resistance at 457 in yields. So
So, we touched on this before, bigger picture, a little bit bigger picture. We've been talking about sort of shorter term, your trading levels and things you're watching, and a little bit of a reversal here in some of this, maybe. Bigger picture, do you think that there's been longer term damage to the confidence in owning US assets?
oh, for sure, 100%. And this is another thing I was kind of pounding the table on a few months ago. I was telling people, look, like everybody, I mean, there's such a thing as home country bias where people invest in their own country stocks. I'm like, you have to diversify internationally,
Mm.
right? I mean, first of all, like, I had a bearish view on the dollar. So I was like, diversify internationally, buy Europe, buy Asia, buy Japan, buy whatever. Um, but the confidence issue I wasn't even really thinking about at the time, because that was before we kind of got into this crisis. But yeah, going back to what you said earlier with what Brent said, with like, especially with bonds and dollar going down at the same time, like that, it's kind of what happened to Liz Truss in Britain last year when she was prime minister for a couple days and the bond market freaked out and the pound crashed. And like, it's very similar.
Yeah, except that I hear people saying that, but then I don't hear people saying, I mean, she left. She only made it for a couple days. Different system, granted, different process to remove prime ministers. No confidence vote gets you out pretty quickly. So the revolving door the process is a lot easier. I don't hear anybody saying that this is going to change to make a change in political leadership at all.
Oh
I
no, no,
Yeah,
no,
you know
no.
what I mean. So, but from the loss of confidence point of view, for sure. Anne Marie was just asking, do you have an opinion on international and emerging markets? Are you in this environment of volatility and uncertainty? Do you favor developed markets over emerging markets? We've seen a lot of commodity price destruction. Does that make emerging markets riskier or that maybe bigger risk, bigger return?
EM is held up pretty well ex China. I'm bullish on anything outside the United States. Period.
Mm.
I have a mix of Europe and EM. I would say probably out of my stock portfolio, I would say 40 to 50% is international at this point.
Mm.
So
Yeah, and I remember you saying the amount of allocation international is going to shock you,
yeah.
compared to, but that's kind of what you're thinking people need to think about depending on your time horizon. Um, we have a lot of people asking about, a change in reserve currency and, does the dollar lose its position as a reserve currency? I want to cycle this one in though, because I think it's with the time we have left, a little easier to answer. Jim K, will the Fed start some version of QE in Q2? There are people who think that even if we get a short-term stabilization, when there's another puke down, that this only ends with the Fed coming in somehow. Do you think that we're going to get some sort of
Um
rescue plan from
de-
the Fed or?
Definitely not in the next quarter, definitely not in the next 3 months. Um if this turn look, the economy moves very slowly. This may turn into a recession. That recession is not going to manifest itself in April. It will manifest itself like in the fall, right? So I think it makes sense to own twos on a long-term basis, get exposure to front end rates, because I do think that later on in the year we could get a pretty vicious rate cut cycle, taking Fed funds back down to like 2.5. But QE, I think QE is probably not going to come back. So
Does the short end um, will move lower, but is there a risk that the Fed doesn't control the bond market anymore and that it won't respond to the Fed because of all some of the other reasons we touched on?
I think if the Fed were to cut right now, then it would be very negative for the back end, and which I think is consensus. I think everybody believes that. If the Fed cut right now, bond yields would probably go up 20 basis points. It would get really, the curve would steepen a lot. And I honestly, I think Powell knows that. I think that's actually one of the reasons he's not cutting. So
Yeah, people think it's because he and Trump are fighting. But that sounds like a much more reasonable,
yeah.
probable explanation that he knows that there'll be a negative market reaction. And not only is that bad, but it also will impact their credibility in the future. So you don't want to tango with the bond market if you're going to lose.
I mean, that's actually what happened with the rate cuts last fall, if you remember.
Hmm.
The Fed cut 50 basis points and the curve massively steepened and mortgage rates went up and everybody was like, what the hell happened?
Yeah. Um, so next over the weekend, none of it, everybody's got to stay glued, right, to the news, to the headlines. But um, do you think we're going to get announcements of trade deals? Is that what the market is now looking for? Some sort of announcement that there's some kind of deals being made?
For sure. For sure. I don't, that's not really the way I think about managing a portfolio. I try to think about things in terms of asymmetries,
Mm,
and getting exposure to asymmetric payoffs, right? Which is why I brought up bonds at the beginning of the show, because I think, look, I think there's support at 5% in bonds. I think there's a potential for something to happen over the weekend. I don't think there's much downside below 5%. So I just, to me, it's asymmetric, and that's the way I look at things. I just look for asymmetries. So
which is probably the smart thing to do. Jared, it's been a tremendous week, and I can't think of anyone better to end it with than you. Thank you so much. We appreciate you taking
thank
the
you.
time.
Yep, of
Awesome
course. Thank
stuff.
you.
And as I said, I see some of you talking about options in the chat. I think we dropped it in there, but we'll put it in the description as well. If you want another tool in your toolbox, you can contact Jared about it. Thanks, everybody. Everyone's joking about the music. Wait, Jared, did I read that you're DJing in Vegas?
Yeah, May 30th. May 30th. Yeah.
Amazing. What are you
Yeah.
doing? Everyone's making their joking around. Of course, the record player is for Jared, in honor of Jared, of course, in my background. Knowing that his, in addition to all his other creative efforts, he's a mad genius DJ. But this is your first time DJing in Vegas, right?
Yeah, it is, and it's a big one too. It's at the Wet Republic pool party at MGM Grand. So
Will you take well, if some of us can't be there, will you take video and share it with us after
yeah,
that goes?
I don't really know how that works. I definitely want to get pictures and video, but I don't want to be like a tool and say, "Hey, can my wife come in and take video?" Like I got to be cool. So
Yeah. Well, we'll figure it out. You got to get somebody in there. Tell them that they're your like assistant or something like
yeah.
that. Carry your bag or something. We need that. Uh, Fantastic stuff. Jared, that's going to be super fun. Everybody should listen to some weekend music and get out there and relax, because I have a feeling next week's going to be much of the same. So have fun, everybody. Enjoy yourselves, decompress, and we'll be here for you next week. Jared, have a great weekend.
Thanks. You too.
Take care and good luck out there, everybody.